listening to the Non-Del Influencers Podcast, brought to you by FirstFunding. Join host Matt Coles as he delivers powerful conversations to help non-delegated lenders succeed and scale in today's market.
All right. Well, welcome back to the latest episode of Non-Del Influencer Podcast. I got to admit, I kind of feel like Kobe Bryant the first day he probably faced Michael Jordan, right? The former host and the great Nate Clear, president of FirstFunding. I can't believe we haven't done this in the year that I've been doing this podcast again. So thanks for being a part of it.
Thanks for inviting me, and hats off to you. I think what you've done with this podcast is, 10 times where we started. So thank you for picking up where I left off and continuing to make this a very insightful medium for the mortgage industry, in particular, the non-delegated channel.
Well, there are times where my ego does not fit into the room. And when we do get leads and they say, I learned by watching the First American or the Non-Del Influencer podcast, I go, that noted, right?
Well, and I think that's terrific, right? I mean, I think that for me, and you know this about me, when you're talking about sales and when you're talking about, soliciting new business, I think one of the best ways to be able to do that is to teach somebody something. There's, a lot that you can do from a price and product standpoint, but it's really difficult to duplicate the same value as teaching somebody that they can use in particular in their trade. And so I'm not, honestly, I'm not surprised that those that do pay attention to this podcast are coming to you and saying, hey, I'd love to do business with somebody that wants to help me grow my business.
Yeah, I mean, and, to dive right into it, obviously, the foundation that was built by you doing this and launching this podcast, I don't know how many years ago. When you look at the landscape of non-delegated today, I mean, you cut your teeth. I mean, you were a road warrior when I first met you out on the road and trying to teach the ways of non-del. And I'm probably sure you probably got a ton of resistance because the support wasn't there, the tech wasn't there, the education wasn't there. Fast forward to what you see today. I mean, just kind of like in a high level overview, what's changed so radically, and what do you feel is like the impetus for everything that's going on in our industry today?
Well, yeah, I mean, when I first got started, right, I had no idea the intricacies and complexities that went into the manufacturing of MBS, right? The sheer creation of a mortgage. And when I got started, right, there was really limited partners that even offered a non-delegated channel. And there was a huge barrier to entry to go from broker into correspondent. So, I mean, you had net worth requirements, ability to get a warehouse funding facility, expertise in generating closing documents, understanding what attorney states meant. There's just a lot of infrastructure that was missing for that bridge. And so I think as you've seen technology grow, it's helped bridge some of that gap. But I think we'd be remiss not to identify that there was and continues to be a big movement for those to go independent. And I don't think that that's, by any sort of, mistake or happenstance. As education becomes more readily accessible for folks, some of the, traditional retail models aren't as mysterious as they once were, right? I think in a lot of those models, you'll see that there's portions of each one of those functions. We'll teach you this sliver and this sliver and this sliver, but we're not going to teach kind of that entire process. I think as information has come out, you've seen wholesale lenders that host a lot of information around the benefits of the wholesale channel. And by extension, a lot of those wholesalers also operate as investors. And so once they started looking at, okay, well, we have certain brokers that are now getting to the point where they've essentially figured out how wholesale works. They want to move into that space as a correspondent. How can we continue to support them in their growth? And I think that's just continued to kind of cascade into what we're seeing today. I would say kind of looking out into the future, We've just continued, right? I mean, the non-delegated channel continues to grow and grow and grow. And I don't know the necessary statistics of what of the wholesale channel is comprised of non-delegated versus wholesale, but I've got to imagine that it's somewhere between, 30 to 40% of the entire wholesale channel is in non-delegated, depending on who you talk to. But I also think that a lot of that growth is ultimately going to end up in, delegated correspondent. It's not for everyone, but I think that there's certainly certain customers out there that'll continue to grow into that kind of that next level.
Well, I think that the pickup in basis points by moving to delegated, it's not quite there at that crux of where it's more important just for simplicity of staying in the non-delegated space, right? I just think the pickup of risk is not there. And I always said we will see people move to delegated the day that investors go back to 5, 6, 7 day underwriting turn times. Absolutely, right?
1,000%. Yep.
Yeah, so as soon as we see a backup or a massive inability to meet current SLAs in that channel, that's when everyone's going to go back and say, okay, it's absolutely worth it for me to do that today. But going back to the early days of what you did and when you were hitting the road as a non-delegated, what was the turning point? Like, when did you start to see, you and I hit the road together. I mean, we have stories beyond stories. And it was tough sell. I mean, I remember sitting with you trying to tell people what a haircut was and how it all worked and everything like that. But at some point, there had to be an inflection point, right? What was that point for you? Was it 2020 when rates were dropping, or what was the turning point for you?
I want to say that it happened before that. I think, certainly Dodd-Frank had a major impact. Once we started having the true points and fees testing, that had an impact on how people viewed the non-delegated correspondent business channel in treating, what is a primary transaction versus a secondary market transaction. I think that had an impact. Certainly interest rates declining, and the government space and the necessity for any overages in your set comp going back towards the customer. And if it exceeded fees, now you've got principal reductions that have to be. So now you got to go back into underwriting, now you got to redisclose, et cetera. There was a number of things that came out as a result of that, that increased more people looking into the non-delegated channel. I think early in my career, we're going to talk about the differences between wholesale and non-delegated. By and large, the talk track and the education hasn't changed too terribly much. And we continue to do it to this day. It's a lot of the education, the differences between those two channels. But I would say that, switching over from, the GFE and the HUD-1 to, your LEs and your CDs certainly kind of helped highlight some of those differences. And certainly we started seeing a number of additional customers come over. Now, I'm kind of talking out of both sides of my mouth because you and I both saw that those that were established in the correspondent channel were like, whoa, 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 I don't want to take any risk with this new GFE business coming out. I'm comfortable with the HUD-1, me doing my, having the settlement agent help me balance this thing out. I don't want anything to do with it. And so we did see a very small portion of those lenders that said, you know what, I'm going to go back to wholesale. But it really seemed like afterward, that's where we started seeing a lot more traction in the non-delegated channel.
I will add to that probably the biggest evolution that I've seen is something that's been a slow burn for many, many years, which is the branding experience, right? The ability to, everybody wants to be a brand on social media now. And what I see is that the lenders that are moving from broker to banker, they fully embrace that all the way through. They go out there and they leverage themselves as a lender, and they talk about being a lender, and they talk about the advantages and the branding of the importance of having a start to finish under my name without ever having to explain who the investor is on a certain document or whoever a closing document. And I always start off my conversations with people that are moving from broker to banker. I'm like, and I've never been an originator. So I go, does it ever happen when you're at the closing table and someone asks well, I thought I was closing a loan with you. Who is XYZ that I'm seeing on the note? They're like, oh yeah, that happens all the time. I'm like, well, that's cool. That doesn't have to happen anymore, right? That probably makes your life a lot easier, right? Not trying to hide anything, but at the end of the day, having that branding from start to finish does matter. It's becoming
Well, it
even
doesn't.
more important.
Yeah, and it has a drastic input. And when you look at, a wholesale CD versus a correspondent CD, and the flexibility that you have, so that you can deliver the end product that your underlying borrower, the customer wants, and being able to have that flexibility. And honestly, it ended up kind of being a godsend for us, or for me, when I was hitting the field, to be able to go, okay, let's put in these comparisons, right? I can walk you through the differences in the disclosures here, but this is the way that this one's going to look and the way that this one's going to look. And this is apples to apples, same interest rate. Which one do you want to discuss? And, without fail, it ends up being that correspondent piece. So I think absolutely the branding aspect was huge. And I think the other piece is as technology continued to evolve, there's great resources out there, and DocuTech and DocMagic. You had fulfillment companies that were attorney firms, by and large, based out of the Texas market, because that's where it's an attorney state, right? So a lot of the preparation work needs to be done in those attorney offices. So naturally, they had those platforms. But then you started seeing investors that got creative in their tech stack and being able to provide some of these closing document preparation services, which really helped empower that broker that was comfortable with a lot of the disclosures, understood how everything worked, but didn't necessarily have all the infrastructure in-house, be able to move that without seeing any delay in terms of customer satisfaction. So, which is important, right? Because it's great that you put your brand all over everything, and everything can go great from initial disclosures to the underwrite and getting my clear to close and getting title cleared and all that kind of stuff. But if I don't nail the closing when it's expected to happen, then everything else that I did prior to that is kind of all for naught. And so that, I think, was a really, really valuable piece, and kind of that turning point that we saw, where technology was able to kind of meet those demands for that emerging banker.
And it keeps on growing and growing, because at the end of the day, like, the big thing about retail used to be, and this is going back 10 years ago, oh, well, you don't have your own underwriter. You don't have this. I look at all the great things I have right at my disposal. AI, a lot of our investors are leveraging AI to help with underwriting. It's all there right at our fingertips right now. It's just continues to grow and grow and grow. And so this big black box of secrecy about what makes a mortgage happen on the back end is kind of slowly, fastly disappearing.
Yeah, I think that there's a ton of resources that are there. It still surprises me, I mean, and I'm guilty of it. I was working on this data set just minutes ago, and at the beginning of the data set, there were some spaces in there, and I reached out to somebody in the office and was like, hey, do you know is there a Excel function to get rid of spaces in the front of it? And he's like, I'm not familiar. Dummy, enter it into ChatGPT, see what it tells you. Sure enough, equal trim, and then input the field, and then voila, there you go. It solved it. So I think that the information's there, the technology is there. We, as creatures of habit, in particular in mortgage, need to embrace it.
I do. One of the things that I really do have a lot of respect with you for is the foundation of which you've built FirstFunding, and have had a relationship with some of our very biggest and most successful customers. So without naming names, right, I want to highlight like the talking of an account that you probably brought in at 5-10 million, and now you see them at 150 to 200 million. And not only the pride that looks like, but the confidence in that you saw their vision probably before they saw their vision, and a little bit of what that, because we deal with a lot of broker to banker small facilities, and people are like, I'm going to try this out for a little bit, and then they get in and they're like, oh, I want to come back in for a little bit of a bigger line, and then a bigger line. And you have that long lens of seeing some incredible success stories. So can you just talk us through what that is experience like, and what maybe the early evolution of what that looked like?
Yeah, I mean, I think if you started at the beginning, right, we had some accounts that came in, and they, had a really clear picture of what they were looking for, and they didn't have the infrastructure or warehouse lending at that time really looked poorly on the non-delegated channel. Like we don't care about 5 to 10 units a month, right? And so we really embraced that as kind of that white glove service. And earlier on, we really weren't set up. We didn't have the platform to support them beyond just kind of that emerging banker. And so in a lot of those cases, we saw those guys that got to a certain level and we handed them off to at that point, it would have been the Flag Stars, the First Tennessee, some of the names that just, don't even exist anymore. And hey, pleasure to work with you. And for us, we just knew that there was going to be, either a rising star out of that group that was going to split off and open up their own shop and come back to FirstFunding. And we were good with that. We're kind of the unique perspective that I have had is the kind of the evolution of FirstFunding as a warehouse lender, in that we've been able to continue to evolve so that we're absolutely can help that broker making that transition into correspondent, but we've gotten to know our customer even more closely, so that we can start to see that, okay, well, they're starting to build. Okay, they're bringing in additional processors. They're looking to reduce the scope of fulfillment services. They're looking for dock vendors. They're looking for additional training from FirstFunding on what we do prior to sending out warehouse advances. And in that way, we've been able to be leaned on as a partner in them looking to that next level. So a lot of the growth that we saw it came by the way of our customer wanting to grow. They wanted somebody that would continue to grow with them and take a chance on them, honestly. And so we built a lot of our processes hand in hand with existing customers to this day, and some customers that left. And I called back and I was just like, hey, I'm so happy to see your success, but what are 3 or 4 things that you're seeing now that we should implement and would make it overall? And the mortgage industry, Matt. I mean, if you ask people for help in this industry, by and large, you're going to get absolutely happy to help you, whether you're working together or not, or we're working, in the future. So I think that that's been really helpful for us and for our customers to this point. I mean, we kind of cover the whole gamut, and we've got more coming out, later this year in terms of the market segments that we're looking to serve. But I think, kind of getting back to that core of what were those customers, like, a lot of them started off that they wanted more control. That's where it starts. I want control over my brand. I want control over my pricing. I want control over the process. I want to be able to nail it every single time, regardless of where I'm going to deliver this loan. And over time, that kind of evolves into at what point do you want to get to?
Yeah.
I think a lot of them, it's from a sales aspect, and then it becomes operational, that there's additional efficiencies if they bring it in-house, and that's where they, ultimately end up being those 150 to 200 million. But for every single person that brought it all in-house, there's another guy that said, you know what, I'm best at the sale process and recruiting loan officers and managing the process, and I'll stay in the drastically reduced risk area and stay as a non-delegated.
Well, success begets success, right? So you continue to see a lot of lenders come in, and I've even seen it in the 2 years that I've been here. They come in very small. Let me just dip my toes into it, see how it goes. And then it's almost like, we've seen people come in for 3, 4, 5 modifications into their line sizes. It's pretty exciting to watch, and it's fantastic. But that does lead to what's next, right? What is going on? What do you see? Not necessarily with FirstFunding, but in the non-del space in 12 months from now. What's the next evolution of what we're trying to accomplish here?
I think that you're going to continue to see people look at reduction in cost. We certainly see it in the headlines, right? Credit report costs and title insurance costs, et cetera, et cetera, et cetera. But if we look at the origination cost of the mortgage loan, it's not in the one-time premium of insurance or in the title report. It's in a lot of those other areas, and so kind of in that line of what in that manufacturing process can be taken off. I think that disclosures and docs is certainly an area for certain lenders of volume to be able to take that in-house. speed up, maintain control, and reduce cost. And with that reduction in cost, that can be passed on to the borrower. Certainly, if we've got higher interest rates at, what are we at, 6.4 to 6.6% today. I think that we got to look internally at what are those processes that can be brought in-house with relatively low risk, and being able to, in turn, kind of offset some of those costs relative to the customer. But I still see a lot of growth in the channel. I would expect that you see, if we're at 30 to 40%, I think that we end up 50, 60% of the channel ends up being, non-delegated correspondent.
You still see, I mean, the old adage used to be, in the mortgage business especially, ups and downs, right? When it gets good, throw people at it, throw people at it. I think the next cycle, I don't think we need to throw people at it. I think we need to throw AI and efficiencies at it, right? And so really what I'm talking to a lot of our lenders about today is what happens when rates drop 1%? What efficiencies are there today that you can replicate? It is manufacturing. It is not, it is manufacturing a process so that it's not a one-off every single time. And there is incredible savings and efficiencies, and there's plenty of opportunities for people to participate in that. Just from our standpoint, we're trying to find a faster way to turn the wires out through AI. We're trying to find a way to get information and purchase faster for all of our lenders. So we're trying to figure out all the efficiencies, and we haven't even scratched the surface of AI yet. And I think we're really blessed, being that we're owned by First American, that they gave us the capability with some AI opportunities, and it's really opened up my eyes for how efficient it can make me.
I think it's I ditto. I think on that. I think that the AI that's out there for specific use cases has been phenomenal. In our own technology development meetings, hearing what they're doing with AI, and AI being able to write a bulk of code in a matter of seconds or minutes that used to take days. It's just the evolution and the speed is just astoundingly quick. It's really going to be cool to see over the next, as you said, right, the next 12 months. What does this next thing look like, and what are some of these legacy systems look like? I know we're kind of chomping at the bit as to what fuel ends up looking like, and what we thought was going to be a 3-year project, could be as little as a year, using a lot of these technologies. And I know we're not the only ones.
No, absolutely, right. So, Mr. Clare, cannot thank you enough for the opportunity, the foundation that you set in. It really is. I've been blown away. I have been in many offices where they go, "Little old Nate Clear is the president of FirstFunding," and it's been an exciting ride. So appreciate your time today, and let's go out and make it a continuously successful year. Thank you for your time, and we look forward to seeing everyone on the next Non-Del Influencer podcast.
Excellent. Thank you, Matt. Doing a great job. Keep up the good work.
Thanks for tuning into the Non-Del Influencers podcast, powered by FirstFunding. For more resources and episodes, visit nondelinfluencers.com.